a land where economic history reads like a suspense novel, the Netherlands. You might think of tulips and windmills, but there's so much more beneath the surface of this small but mighty nation. The Dutch didn't just stumble into modern economics, they practically wrote the first chapters. Picture this. Centuries ago, they were already mastering international trade, setting up corporations, and yes, even pioneering financial markets. But it wasn't all smooth sailing. They've seen boom and bust cycles so wild, it makes today's stock market swings look like a mild roller coaster ride. Fast forward to now, and the Netherlands isn't just keeping up, it's leading the pack in productivity. Think of it as the productivity champ of Europe, rubbing shoulders with economic heavyweights like the USA. But here's the kicker. They've managed to achieve this while still prioritizing quality of life. Imagine a country where part-time work isn't just common, it's the norm. Thanks to a culture that values a well-rounded life over workaholic tendencies, the Dutch have nailed the art of balancing output with happiness. And let's talk resources. The Netherlands sits on a gold mine of natural gas, enough to make any economy drool. But here's where it gets interesting. They've chosen to leave a significant chunk of it untapped. Why? Environmental concerns and a little thing called Dutch disease, where reliance on one industry can backfire spectacularly. Speaking of which, their history reads like a cautionary tale for other economies. They've learned the hard way not to put all their eggs in one economic basket. It's a lesson in diversification that many could stand to learn from. So, how did they pull it off? It's a mix of foresight, adaptability, and a knack for balancing risk and reward. The Dutch aren't just thinking about tomorrow, they're paving the way for it, all while ensuring today is pretty darn good. In a world where economic success often comes at the expense of well-being, the Netherlands stands out as a beacon of how things can be done differently. It's not just about GDP numbers here, it's about human development indices that soar and a society that values progress without leaving anyone behind. So, why does the Netherlands do things so differently from other wealthy nations? And should their model be a blueprint for others to follow? The Dutch approach is a tale of pragmatism and foresight. They've long understood that economic success isn't just about raw output. It's about quality of life and sustainability. Unlike some economies fixated on relentless growth, the Netherlands prioritizes balance. They've mastered the art of fostering a productive workforce while ensuring people have time to enjoy life, a model where part-time work isn't a compromise but a choice. And should other major economies follow suit? Well, the Dutch model offers a compelling case. It's a testament to how a strong financial sector can fuel growth without sacrificing stability. Amsterdam's historic stock exchange isn't just a relic, it's a testament to their commitment to long-term investment and economic resilience. So, should we put the Netherlands on the Economics Explained leaderboard? Absolutely. Their blend of economic prowess, societal balance, and historical resilience makes them a standout example in today's global landscape. Whether it's their commitment to sustainable growth or their innovative financial strategies, the Dutch model offers lessons that transcend borders. In a world where economic paradigms are constantly evolving, the Netherlands stands as a testament to what's possible when innovation meets prudence. So, whether you're an investor looking for opportunities or simply curious about the forces shaping our economies, keep an eye on the Dutch. They're rewriting the rulebook, one tulip at a time. At its peak, the Dutch merchant fleet was a behemoth, dominating European shipping with a capacity that rivaled half of the continent's total. The Dutch East India Company in particular stands as a pioneer of multinational enterprise, but let's put things in perspective. Claims of its astronomical value, like a $7 trillion market cap in today's terms, are often exaggerated. To contextualize, that would be like Apple today having a market cap of $700 trillion. Unthinkable. The wealth of the 17th century was a drop in the ocean compared to today's global economy. Adjusting historical figures to modern standards is fraught with challenges, and other companies of the time, like the Mississippi Company, had higher market valuations, albeit under dubious circumstances. But beyond the history lesson, these early Dutch ventures laid the groundwork for modern economic strategies. Despite setbacks, including French occupation and the loss of Belgium, the Netherlands adapted. By the 19th century, they embraced industrialization and leveraged a business-friendly environment to regain footing. Fast forward to the aftermath of World War II, and another twist: the discovery of vast natural gas reserves. It seemed like a windfall, a boon for an energy-hungry Europe. However, this discovery wasn't without its downsides. Enter Dutch disease, a term coined when a sudden resource boom disrupts a nation's economy, leading to over-reliance and neglect of other sectors. The Netherlands faced a dilemma: how to harness newfound wealth without succumbing to economic imbalance. Their solution? Strategic investment in infrastructure and technology, ensuring that prosperity was shared across society. It's a lesson in managing abundance responsibly, a balancing act between short-term gains and long-term sustainability. Dutch disease, a phenomenon where a sudden resource boom can disrupt an economy, is a cautionary tale. Yet, the Netherlands managed it better than most, leveraging their existing wealth to mitigate its impacts. They taxed short-term gains from natural resources to fund long-term investments in diverse industries, a strategy that's harder to implement in poorer countries where immediate gains could drastically improve quality of life. Today, the Netherlands shines as an economic powerhouse, driven by a diverse range of high-value industries. Its allure for global businesses is undeniable, offering a business-friendly environment coupled with a robust legal system and a multilingual workforce. This combination has made it a strategic hub for international operations within the European Union. But what truly sets the Netherlands apart isn't just its economic prowess. It's their unique blend of business acumen and egalitarian values. Part-time work isn't a compromise here. It's a choice supported by legislation that promotes work-life balance without penalising career progression. This approach has elevated labour force participation rates, even surpassing the workaholic culture of the USA, all while maintaining a generous social safety net. Moreover, the Netherlands proves that economic success doesn't require overworking its people. Instead, it champions a balanced approach that values both productivity and well-being, a luxury few economies afford. Now, while the Dutch model may not be easily replicated elsewhere due to unique historical advantages and infrastructure, it offers valuable insights. It shows how strategic investments, prudent economic policies, and a supportive regulatory framework can foster long-term prosperity. The Netherlands may be small in land mass and population, but with a GDP of over $1.1 trillion, it's the 17th largest economy globally. Given its size and output, the Dutch economy scores an impressive 8 out of 10. However, growth has been lackluster. Despite resilience, the country struggled through the Eurozone crisis and subsequent slowdowns. Recent trends are positive, but with sluggish growth averaging around 1% annually over the past decade, it scores a 3 out of 10 in this category. The Netherlands has successfully diversified beyond natural resources to tourism, finance, trade, and high-yield agriculture. This resilience earns it an 8 out of 10, noting its smaller footprint in global corporate giants. With an average score of 7.6 out of 10, the Netherlands secures a strong position on the Economics Explained leaderboard. Its blend of productivity, stability, and strategic industry focus showcases a model that balances tradition with innovation. Thanks for watching. Please like the video, press the subscribe button, and also drop your thoughts in the comment section. Imagine knowing the secrets of a man who predicted the 2008 financial crisis and turned it into a fortune. Michael Burry, the legendary investor immortalized in The Big Short, is back with bold new moves in the stock market. What could he possibly be seeing that others don't? Brace yourself as we dive into his latest 13F filing to uncover the secrets of his portfolio and what it might mean for the rest of us. First off, for those of you who might be new here or need a quick refresher, Michael Burry is the genius who predicted the 2008 housing crash. His story was so captivating, it became a movie called The Big Short. Now, Burry is known for his sharp, often contrarian investment strategies. And when he makes a move, the financial world pays attention. Burry just released his latest 13F filing. This document is like a peek behind the curtain, showing us what stocks he's buying and selling. Usually, Burry's moves can seem all over the place from one quarter to the next, making it tricky to pin down a clear strategy. But this time, two strong themes have emerged, giving us a bit more to chew on. Inflation. Remember when we thought we were getting inflation under control? Well, Burry seems to think otherwise. He's betting big on another wave of inflation hitting us in 2024. Why? Burry believes that the economic measures taken to curb the initial wave of inflation might not be enough, and we could be in for a second round. And if history has taught us anything, it's that when Burry makes a prediction, it's wise to listen. Now, digging into the specifics, Burry's portfolio shows some interesting shifts. He's heavily investing in commodities and companies that tend to perform well during inflationary periods. Think of sectors like energy, agriculture, and basic materials. These are the industries that can pass on higher costs to consumers, making them a safer bet when prices are rising across the board. One standout move is Burry's increased stake in oil and gas companies. With the global energy landscape being as volatile as it is, and with supply chain issues still making headlines, this move suggests he's anticipating higher energy prices. And higher energy prices often signal broader inflationary trends. But that's not all. Burry is also eyeing agricultural stocks. Why? Because food prices are a major component of inflation. As the world grapples with climate change and supply chain disruptions, agricultural commodities are likely to see price hikes. Burry's bet here is that these stocks will benefit as food costs soar. Now, let's address the elephant in the room. Is Burry's prediction something we should all be worried about? Well, he's been right before, and his track record speaks volumes. But it's also important to note that the market is unpredictable. While Burry is positioning himself for what he sees as an inevitable second wave of inflation, we need to consider other factors too, like potential government interventions and global economic shifts. So, what does this mean for the average investor? Should we all start buying up commodities and energy stocks? Not necessarily. While it's intriguing to follow Burry's moves, it's crucial to do your own research and understand your own risk tolerance. Diversification is key, and jumping on trends without a solid plan can be risky. Now onto the specifics of his recent activity. Burry has been doing a lot of chopping and changing in his portfolio. He sold out of 14 stocks, including big names like Google, Amazon, and Oracle. At the same time, he added to 11 positions and bought 5 new stocks entirely. Here's where it gets really interesting. One of these new additions is the Sprott Physical Gold Trust. In Q1, Burry bought over 440,000 shares, making up 7.37% of his US portfolio. Now, you might wonder why he's buying into gold when prices are already high. Well, gold is a classic hedge against economic uncertainty and inflation, two things Burry is very concerned about. Sprott Physical Gold Trust is a closed-end fund that holds assets in physical gold bullion. With gold prices at near all-time highs, this move might seem odd for a value-minded investor like Burry. However, gold is a safe haven during times of economic instability and market volatility, something Burry has been vocal about. His investment in Sprott aligns perfectly with his long-standing concerns about economic conditions. Now, historically, gold has been a go-to asset during economic uncertainty. Its price spiked during the Great Depression, skyrocketed in the 70s, for reasons we'll discuss shortly, and surged after the tech bubble burst, the 2008 financial crisis, and more recently during the COVID-19 pandemic. While much of gold's appeal is psychologically driven, the trend is undeniable, and Burry is banking on this uptrend continuing since October last year. With all that's happening globally, from tariffs and elections to wars, supply chain disruptions, and rising inflation, gold is an attractive hedge. Beyond economic downturns, investors flock to gold for its stability. It's a similar story to why Burry is increasing his positions in commodities and agricultural stocks. In summary, Michael Burry is back and making bold predictions once again. His latest 13F filing reveals a clear strategy aimed at preparing for a second wave of inflation in 2024. By investing heavily in commodities and industries that thrive in inflationary times, Burry is positioning himself to potentially profit from what he sees as an inevitable economic shift. Michael Burry has a significant investment in JD.com, which is the largest stock in his US portfolio. This investment is worth approximately $99,986 million. However, considering his estimated total fund size of $238 million, JD.com represents just about 4% of his overall portfolio. While this is a substantial investment, it is not overwhelming in the context of his entire fund. More interestingly, Burry appears to take a cautious approach to investing. It is estimated that around 52% of his portfolio is allocated to US Treasuries. This large allocation suggests that Burry is being careful amid the current market volatility, preferring the relative safety of government bonds over more volatile equities. It's important to understand that the information about Burry's investments comes from 13F filings. These filings provide a snapshot of his US portfolio at a specific point in time, but they have limitations. For one, they only cover his investments in the United States, meaning any international investments he holds are not included. Therefore, the 13F filings do not give a complete picture of Burry's entire investment strategy. In addition to the limitations of the 13F filings, these documents only show what Burry held at the end of the reporting period. They do not account for any changes made shortly before or after the filing. Given these factors, it's essential to consider the broader context when analysing Burry's investments. His significant holding in JD.com and the substantial allocation to US Treasuries indicate a balanced strategy. On one hand, he is investing in a major Chinese company, reflecting confidence in its growth potential. On the other hand, his large investment in US Treasuries shows a preference for stability and caution, likely as a hedge against market uncertainty. Thanks for watching. Please like the video, press the subscribe button, and also drop your thoughts in the comments section.
Sweden decides to switch from left to right. It has nothing to do with politics, you understand.
Imagine waking up to find your entire country's driving system flipped overnight. It's September 3rd, 1967, a day forever known in Swedish history as Dagen H or H-Day. On this monumental day, Sweden made the audacious move from driving on the left side of the road to the right, aligning themselves with their European neighbours. Intrigued? Let's delve into the fascinating story of how an entire nation adapted to this change in a single night. Now, imagine the chaos and the excitement of such a transition. But it didn't stop there. Soon after this traffic revolution, Stockholm unveiled a major new 6-lane motorway. This road was designed to cater to the bustling heart of the capital and was a marvel of its time. Fast forward to today, and this road, initially a shining beacon of modern infrastructure, is now struggling under the weight of Stockholm's ever-growing population. The city's traffic congestion has ballooned, and the motorway, even with additional lanes added over the years, is simply not keeping up. Drivers and residents alike are feeling the squeeze, and something had to give. Enter the Stockholm Bypass, a bold, audacious project that carries a staggering $4 billion price tag. So, what's the plan? Well, the bypass is an ambitious road and tunnel system designed to circle around the entire city of Stockholm. Once completed, it will stand as one of the longest road tunnels in the world, a true engineering marvel. Now, you might be thinking, why go underground? Building beneath a city is no small feat, especially a city like Stockholm, renowned for its beautiful waterways and picturesque islands. This isn't just a simple tunnel, it's a deep dive under some of the most iconic and complex terrain you could imagine. The stakes are high, but so are the rewards. Why is Sweden betting big on this tunnel? The answer lies in a mix of necessity and vision. Stockholm's population is on the rise, and with it, the pressure on its infrastructure. The current road network is stretched to its limits, and expanding above ground isn't a viable option anymore. Space is limited, and the need to preserve the city's aesthetic and historical integrity is paramount. So, the solution? Go deep. The Stockholm bypass promises to ease the congestion by providing an alternative route that bypasses the inner city. This means smoother, faster journeys for commuters and less traffic choking the city's streets. Imagine cutting down your daily commute time while also enjoying a reduction in city noise and pollution. Sounds like a win-win, right? Of course, tunneling under such a complex landscape comes with its own set of challenges. Engineers are tasked with navigating through rocky ground and ensuring the stability of the tunnel beneath the waterways. It's a race against time and nature to dig their way out of this problem, but the payoff could be transformative. When completed, the Stockholm bypass will not only be a testament to modern engineering, but also a vital artery that breathes new life into the city's transport network. It's a bold gamble, but if there's one thing Sweden has shown us, from Dagen Age to now, it's that they're not afraid to make bold moves when it comes to their infrastructure. Even though Stockholm boasts an extensive public transit network, driving remains the most popular way to get around. But the roadways are feeling the strain, and something needs to be done. Enter the E4 bypass, a massive $4 billion project aimed at easing the city's congestion. So, what's the E4 bypass all about? Let's break it down. Starting south of the city in Skärholmen, this 21-kilometre system will feature a colossal 18-kilometre tunnel. It will loop around to the north, ending in Häggvik, effectively diverting traffic away from the city centre to the west. Imagine the relief for daily commuters and the reduction in city traffic. This isn't just any tunnel though. We're talking about a twin set of tunnel tubes, each carrying 3 lanes of traffic. That's 6 lanes in total, designed to handle the increasing number of vehicles. Now, let's get into some of the engineering marvels of this project. At its deepest point, the route will reach nearly 100 metres below ground level. Picture that, almost the height of a 30-storey building. Navigating this complex terrain under Stockholm's waterways and islands is no small feat, but Swedish engineers are up to the challenge. When the E4 bypass is completed in 2030, it will be one of the longest road tunnel systems in the world. This isn't just a tunnel, it's a crucial investment in Stockholm's future, designed to handle the growing traffic and improve the quality of life for its residents. So why is Stockholm betting big on this super deep tunnel? It's all about foresight and necessity. The current road network is maxed out, and expanding above ground simply isn't an option. Space is limited, and preserving the city's historical and aesthetic integrity is crucial. The solution? Go underground and create a bypass that not only addresses today's traffic woes, but also prepares the city for future growth. To clear the route, workers began by drilling a ring of holes into the rock. These holes are injected with a mixture of cement and water, creating a barrier once it hardens, preventing water from seeping in through any natural cracks. After sealing the cracks, more holes are drilled and filled with blasting material. Piece by piece, the rocks are blasted away and removed, gradually shaping the tunnel. This method requires precision and patience. It's not just about brute force, it's about carefully managing the stability of the surrounding earth and ensuring the tunnel remains safe and secure. The process is meticulous and time-consuming, reflecting the complexity and scale of the project. Remember, this isn't just any tunnel. At its deepest point, it will be nearly 100 metres below ground level. The E4 bypass is designed to handle the future of Stockholm's traffic while preserving the city's charm and functionality. It's a bold bet on the future, showing Sweden's commitment to innovative infrastructure solutions. Building the Stockholm bypass is no small feat. Excavating the 22 million tonnes of rock and sand needed to make way for the tunnels will take years. Once a section is carved out, workers reinforce the tunnel with rock bolts and spray the walls with concrete. After that, they add an inner wall and an outer ceiling to ensure that no water seeps in. Excavating the tunnels is just one part of the challenge. Ensuring driver safety is critically important. Let's be honest, if you're driving deep underground, you want to be sure you'll make it out safely on the other side. That's where a state-of-the-art ventilation system comes in, featuring 250 reversible jet fans and 4 exhaust air stations to maintain air quality. In case of a vehicle fire, a water-based suppression system will be built into the tunnel ceilings in 50-meter-long sections throughout the entire tunnel. Constructing a tunnel under a city is far more technically complex than building a traditional road, but the benefits are significant. Tunneling helps reduce the project's environmental impact and preserves more space above ground for housing and other developments. This approach aligns with Stockholm's commitment to sustainable urban planning and preserving its unique charm. The E4 bypass is more than just a tunnel. It's a visionary solution to a pressing problem. With Stockholm's population set to grow dramatically, the city needs a robust infrastructure that can handle increased traffic while maintaining its quality of life. This bypass is a testament to Sweden's forward-thinking approach to urban development. Now, this all sounds like a lot of work to construct new infrastructure for cars at a time when people are being encouraged to take public transit over driving. Sweden is even banning petrol and diesel cars from parts of the city to clean up its air. This is part of a broader goal to reduce carbon emissions by 30% by 2030. Officials estimate that traffic emissions from the new bypass will only contribute less than 1% of CO2 emissions. The Stockholm bypass has been a long-awaited project. Originally, it was supposed to be finished in 2018. But here we are in 2024, and the roadway is still under construction. It's not expected to be completed until the end of the decade. To make matters more complex, the project has blown through its initial $3.3 billion budget by nearly $1 billion due to contract cancellations, worksite safety issues, and political hurdles. As Stockholm's population continues to swell rapidly, the city doesn't have much more time for additional delays. Traffic in the city centre is already feeling strained, so the completion of the bypass will be a welcome relief. This is one of Sweden's largest ever infrastructure projects, and the light at the end of the tunnel is growing brighter. All eyes are on Sweden to see its success. Thanks for watching. Please like the video, press the subscribe button, and also drop your thoughts in the comment section.